G'day traders, I'm Greg McKenna. Welcome to Markets Morning. It is Tuesday the 13th of November. Although it feels like Friday the 13th for me. I spent 4.5 hours writing the morning report this morning, hit Control Z because I wasn't happy with what I'd just written on that introduction bit where I say key takeaway, and boom, I lost all my work. Anyway, luckily that doesn't impact the video, although it's a bit later than normal that I'm recording this. I've been in a bad mood. So let's hope things improve. But stocks are in a bad mood too. The selling came from nowhere. Goldman Sachs got belted. Apple got belted because of one of its suppliers that does facial recognition stuff, gave a warning. That then got people wondering about, peak tech, iPhone sales, all that kind of thing. And so we ended up with the NASDAQ down about 3%. The Dow was down 2-point-something% because of Goldman Sachs. And then the S&P 500 itself was down 2%. Someone's dropped another rock in the pond, folks. We're going to get more volatility from this because this will have really sapped the confidence. The inability of the S&P 500 to close above 28.23, that high from that first bounce rally, is telling. Now, this could be the right-hand shoulder of a massive reverse head and shoulders that's being formed. We'll only know that with time. At the moment, as it stands, we got down to that 27.35 region I talked about last week. We're below that now, and it looks like we're headed lower. 27.10 and then 26.84. That's the key level. The S&P is, along with the Yuan, the two most important assets on the planet right now. And where have we got the Yuan? We've got it under pressure. So the US dollar breaking way out last night. Where is the Bank of China, the PBOC? Where are they going to put the set this morning? Already we've got a dollar Yuan in C&H terms, so offshore, at 696.45. Remember, that 698 or thereabouts is a level to watch. We get above 698, we're at 7. We get above 7, I'm calling 720 and above. Now, how's it going to flow? How's it going to go? The Chinese are not going to want it to break out. But if the US dollar is getting stronger, then China's got cover. If they adjust it to their basket, they've got cover. So it's a question of where and when and how far. Dollar in index terms, remember 57% euro is 97.64. We're down at 112.20. So we've broken that 112.80. That puts my target, medium term, at 108.20. What have we got else? We've got 110, 111, a whole bunch of different targets on the way down. Sterling's hanging in there because people are still hoping on Brexit. It's the end game, looking messy. Dollar yen caught an offer. So the yen caught a bid because of stocks. Keep an eye on that. Gold did not catch a bid with stocks. That's really telling, folks. If gold can't catch a bid the way that it did, and the way that it often correlates with dollar yen, then gold's a shot duck. Keep an eye on that one. That's a really important one. Aussie back under 72 cents, 71.76. Kiwi at 67.11. And dollar CAD, I haven't even looked at a dollar CAD chart today, 132.40. Gold down, oil down. Oil tried to rally, but then President Trump came out and absolutely belted. It was early this morning, maybe 5:30, something like that, my time. And President Trump came out and really had a crack at the Saudis, saying that oil prices should be lower. Now, he probably doesn't even know where the oil price is, but he just knows it should be lower. Anyway, what that did is mean the WTI was down for the 11th day in a row. So that's a really dangerous look. I put out a crude piece yesterday saying if it's going to bounce, it can bounce to $65 and still be in a bear trend. We'll have to see what the Saudis do, what OPEC does. If this is like 2016, they'll keep talking and then they will do something. It's when they do something that people will notice. But if we get down through $58 and we're at 59.93 now, if we got down through there, then we would see some substantial losses, maybe even a liquidation event of that 400,000 or so longs. Anyway, 4 minutes. Gee whiz, that's the longest intro in the history of the world. Right, we're going to go straight into stocks today because that's where all the action is. Then we're going to go to the euro, and then we're going to talk commodities. What have we got? So potentially that's a shoulder, that's a head, that's a shoulder, potentially. So if we see a bounce today, if we get up through 28.23, then we're going to go to new highs. No doubt about that. If we don't, if we see another down day, if we see us down below 26.84 or below, if we see us down at 26.84 or below, we're going to go all the way back to the lows, and then I'll be talking to you about 2,500 targets and things like that. A lot of ifs there, a lot of ifs. It was Veterans Day, low liquidity, all that, or lower than normal liquidity, all those kind of things. And the bond market wasn't there. The bond market wasn't there to fall, for the 10s to fall to 307 or 305, which is where we bottomed out last time. We need to see that tonight if the stock market's going to get any respite. If it falls through 307, 305, 293 is the level we're going to be talking about. That would require some real funkiness in global markets. Looking at the NASDAQ, I'm going to skip over the Dow. So we never actually got up there, right? So now we're looking at a full round trip for this. As you see, remember what I always said about what I always say about the first hint on the MACD not being the full one. So now there's a real chance. If we make a lower low in the MACD so that the acceleration's not there, remembering that it's two moving averages and the MACD is in this version, the histogram, the way that I use it, is just the distance between the two moving averages. So we could see another move back towards the lows for the NASDAQ. For our local market, it was a head fake yesterday. We did close above 59.33. But as I said to James Dagger Nixon on Your Money yesterday when I was chatting with him at 4 o'clock, and Nick Garling, that we had to see where it was this morning, and obviously it was lower this morning. Now it's opened up okay this morning. We'll have to see what happens to oil. It's down. It looks under pressure. 58.25 is the level for me. If it holds 58.25, well and good. If it can't, it's a shot duck. So we have to keep an eye on that. DAX, I haven't even looked at a DAX chart yet today, folks. I'm sorry, I had a bit of a interrupted. I'm still targeting a move back to 11,000, then ultimately a move to 10,000 for the DAX. That's about as much as I could say. You can draw a trend line across there. You can draw a trend line down there. Now, you've had that big fall. That's bearish engulfing. There's one thing I've noticed over the past 6 or 12 months. Bearish engulfing candles work really well. More often than not, followed by another fall the next day. So we'll keep an eye on that. Watch that Yuan rate. It's going to be really important. Speaking of currencies, why don't we just go straight there and then we'll do Euro. So you can see, if you look at it on the weekly, it's probably a better way. You can just see we're inching up there again. Now, normally, and I've been saying this for ages, normally that's a warning. But this is a strange currency, the old Yuan. It's not exactly free, is it? So let's just get rid of that because that's no longer relevant. One thing you'll note, all the Elliott wave people that were saying that euros can't go down through 113, wrong. Why am I not an Elliott waveician? Because they recount all the time. Now, I always talk about when I'm using trend lines, how some people hate them because you can redraw them. Elliott waves, there's always a different interpretation. Always a different interpretation. And, anyway, frustrating, Elliott waves. What do we got? Same way that the fifth wave for the Elliott wave for the S&P could have been any time in the last 12 months, probably is in now, but anyway, it doesn't matter. That's why I like my approach. I don't have any pretense to certainty. I don't have any pretense to know what every single nuance of a move is going to be, an A, a B, a C, an X, a Y, a Z, a 1, a 2, a 3, a 4, a 5. We just move with the market. We move with the momentum. We move with what the combination of fundamentals and technicals are telling us. Anyway, rant over. We've got to watch this level. This is $1, 6.98. We get up through 6.98. Market's going to be on tenterhooks if we get up through there. Euro, right, we've broken. This is the weekly, right? This is the chart we looked at yesterday. We broke. And this could be what the stocks are doing. Remember we talked, I don't know if you remember, shoulder, head, shoulder, and then we had this reversal. That's what stocks could be doing. So think about that. Right, what do we got here? 111. If I turn that into a weekly, you can see that that's 111. 111 is the target based on this latest move. Remember remember my very first system. Just a Fibonacci projection system. You get a move, you get a retracement, and it pulls up somewhere between the 38.2 and the 61.8. And then when the level breaks, whether it's top or bottom, the projection is 138% or minus 138%. Both the same thing. So 111 is the new target. More structurally, though, 108.20 that I've been talking about is in. So Euro does look under pressure. How big is CPI going to be tomorrow? Maybe, maybe not. Who knows? Right, what have we got here? We've got a potential rollover stochastic. Low volume though, but volume did pick up a little bit. Ugly little pin bar. We've tried to get up. We haven't. What was our high? Our high yesterday was 114.20. So we haven't taken out the 114.50 to 75. I'm not bullish dollar yen unless we take out 114.50 to 75. Got to see that zone go. If that zone goes, then I'm talking about 118. We talked about that yesterday. Unless or until that, if stocks are going to be funky, then dollar yen is more likely than not to have an offer. Sterling is hanging in there, even though that looks like it collapsed. I don't know why there's that gap there. Oh, there was a gap there yesterday morning, wasn't there? Because MT4 opened lower. Later, I should say. So what have we got? That looks like it's going to have a full round trip back to 126.90, whereabouts the low was recently. If you shrink that down, you get a better sense of it. If 126.90 gives way, then it's 126.60, then you're talking about 120. Obviously, positive Brexit news, and we're back up at 130.60 or thereabouts and trying to break higher. But we'll keep an eye on it. It's very news-driven at the moment. In terms of the Aussie, it's done better than everything at the moment, better than copper, better than the euro, better than interest rate differentials would suggest. But yesterday I did suggest I thought it was going to come back and retest the trend line. It's a steep trend line. The trend line's now at 71. So if we get down through here, we've got NAB business confidence out this morning. I would expect that to be okay, but if it is not, it will put pressure, downward pressure on the Aussie dollar, which, as I say, outperformed Aussie Euro. Aussie is bouncing a little bit, so Aussie might underperform a little bit. So 71 cents to me seems like a reasonable place for the Aussie to come back to. Then we've got 70.20 to 70.40, and below that, we're talking about 68.5. I would have thought. I don't like it when everything seems automatically negative, which it does as I'm talking, doesn't it? That for me is a sense of caution, but equally, because I am a cautious trader, I don't know, I do know why it is. It's because of my background, because of who I am, because of who my family was, because of the type of people we were, because some of them were, gamblers and all that kind of stuff. That's why I'm cautious. This is what we've got in dollar CAD. We've got the breakout, and we've got the breakout of the breakout, if that makes any sense. So 133.20 is the target. If dollar CAD continues to break, then there's no reason for me to worry too much. We still haven't seen the break in dollar Sing, though. If I get a break in dollar Sing 2, as well as a break in dollar CAD, and I've got the euro going lower, we will be not only talking about 100 in DXY, we'll be talking about substantially higher and bigger levels. Kiwi, reversal of last week, looks exactly like the Aussie chart, doesn't it? 66.5 is kind of where we're going there. Obviously, there's people saying things and data, but when you think about a currency is a bilateral trade. So think about it in stocks. Do I want to buy Apple, or do I want to buy, Huawei or something, that sort of thing. Do I want to buy Google? Do I want to buy Amazon? When you make a relative bet, if you're doing it at index neutral, you've got to say, well, Amazon's going to outperform Google, or Google's going to outperform Amazon. Likewise, if I'm buying corn and selling wheat, I'm making a relative bet. When I'm buying a currency, I make a relative bet every single time. And so the key now is that there's lots of drivers of currencies, but the key is this is a US dollar move. This is a surge in the US dollar. And if that surge continues, if CPI does anything like PPI suggests it will, and it may not, but if it does, US dollar surges, because the Fed will keep tightening. If you say to me, what do I think is happening now? My sense is the market is going to go and try and find where the Powell put is. Where is the point where the Fed genuinely gets worried? Well, clearly it's not the lows that we saw in October. It's got to be lower than that. That, to me, feels like where this market wants to go. It wants to find out where the Powell put is. US 10s, 305 to 307 tonight, unless we see a stock market bounce. If that happens, well, that could actually give us the stock market bounce. If stocks keep falling, 305 gives way, then we're looking at 293. That might be a circuit breaker. Anyway, gold. Gold started to correlate really nicely with stocks. All right, it was going up as stocks were coming down. It hasn't happened. Maybe that's because we haven't seen the new low. Maybe it's because it was a thin Veterans Day holiday. Or maybe it's because having failed to break up through 1252 and run anywhere close to what it could have, gold is now breaking down. If you think about it, if we take out 1195, then we're talking about 1183, then we're talking about 1160, and if 1160 breaks, we're talking about 1045. So let's just keep an eye on this, watch the charts. If it catches a bid with stocks falling, well and good, but we have to keep an eye on this. This $2 range here, 1197 to 1195, to me is important. Once we get back below that, then we've got potential cascades. Silver under pressure too, breaking down. 1193 is the level that I've identified as the big one for silver that you've got to watch over here, 1193. If that breaks, then you've got cents coming off. We're not talking points of cents. We're talking cent. You've got dollars coming off, not points of cents, which is really important. In terms of copper, relatively quiet, all things considered. But again, if we see that breakdown, now obviously I'm going to say, right, that trend line is first, that fractal is second. So 264 is a level we've been talking about for a couple of days, couple of weeks probably. 264 is the level to watch. If we bounce off here, well and good. If it goes 255, if 255 goes, then all heck breaks loose. In terms of oil, yesterday I put out that piece. If you didn't see it, have a look. That's weekly. You can see that now we're down through 59.25, 59.05, and we've got about 58. It's 50, depending on where you draw the line, it's 58, 57.88. So on the chart in markets morning, which is smaller than usual because of the loss of copy. Anyway, so that's 58 there. All right. So my sense is we're going to the 200-day moving average potentially, if 58 gives way, and if Khalid Al-Falia cannot engineer a bounce by jawboning or actually cutting. We could see a liquidation event if 58, which would render my how far can it bounce, even though it was kind of a bear case. You know, it can bounce to 65 and still be going lower. It wasn't really the tone of it. Bearish engulfing. Not much you can say there. Have a look at the weekly. What have we got? You know, we got $64. If I have a look at what I wrote on the weekend for oil, just bear with me a sec. What did I write? I wrote for WTI approaching game-changing support near 57.5. And I wrote for Brent target hit and chances of further falls. And I wrote to myself full round chip achieved while below $70 heads to 64. So it could be quite an aggressive bump. And if that happens, if we do get this liquidation event, that would suggest to me that OPEC will cut and cut hard. I don't think I've forgotten anything. I think that's mostly it. I've gone through pretty quick today. Bitcoin still doing nothing long term. It's at 6,300. No one's playing. There's too much volatility in proper established markets. I don't mean to denigrate Bitcoin, but I mean more established markets where there's more liquidity and people are more comfortable playing. So that's it from me. NAB today, a German CPI, UK employment, lots of Brexit news. What is Trump and OPEC going to say about oil, or will they go to their corners? If they go to their corners, then we're going to be waiting for API data and EIA data later this week. NFIB optimism in the US tonight is going to be important too, but that's where I'll leave it. Have a great day. Lots of trades. Hope you're on some of them, and we'll be back tomorrow. Bye for now.